Kong's soaring rents are forcing companies to move to cheaper locations in mainland China. The city's rents are at 12-year highs, matching levels seen during the Southeast Asian economic boom. One company taking advantage of the trend is Executive Center. It provides premium office space in cities across Asia. Executive Center CEO Paul Salnikow joins us now for more here in the studio. Good to have you with us, Paul.
Thank you.
Hong Kong's landlords certainly getting a stronger bargaining power these days. How much costlier is it going to be for the companies that do business here?
Well, I think in the next 12 months, any company that will be having a rent review in Hong Kong will see a doubling of their base rent, which would mean taking their office accommodations to record high levels for Hong Kong. And so the Executive Center is providing companies in Hong Kong and across Asia with a hedge against that by offering temporary, fully furnished, fully serviced, fully IT'd office accommodation, which companies can move into to ride out this peak in the market.
Who's most affected? Is it just the small businesses or multinationals across the board?
Well, most Hong Kong landlords nowadays are not accepting, for grade A buildings, they're not accepting tenants of less than a full floor. In fact, it's now multiple floors. So those companies that are needing accommodation of less than 20,000 feet are being squeezed out.
Rents are at record high levels. Is this a case of a bubble waiting to burst in the Hong Kong property market? I mean, rents now mirror what we saw in '94.
Well, I think the underlying reasons are slightly different from '94. '94, it was much more speculative, whereas right now it's really a squeeze on supply. There's not been much new office space built in Hong Kong. But the release valve on this, I think, which we should be seeing over the next 18-24 months, is China, where there is a rapidly growing office market sectors in Shanghai, Beijing, and the secondary cities, and we're seeing a flow of companies downsizing in Hong Kong or retaining just a core headquarters presence in Hong Kong, but upsizing rapidly in China.
And you mentioned the second-tier cities, which is pretty important because you would see an exodus to the first-tier cities, but now there's this growth in second-tier cities.
Yes, well, the Executive Center itself, we're in the midst of a $20 million expansion, which will complete by 2008. And over this next period, we're looking to open 20 new centers in China, one per quarter in Beijing and Shanghai. But we're also moving into Chengdu, Dalian, Tianjin, Guangzhou, and Shenzhen. And we are following our clients into these markets.
Why are your clients heading to the second-tier cities? What's going on? Is it them seeking cost savings?
Well, it's two things. One is the expansion of the serviced sector. So financial services, accountancy, consultancy, IT, the demand for those type of services in these secondary cities is emerging, and they need to move into and support their businesses, and so we're supporting their office operations.
So what is the growth rate like in terms of rent when you talk about the second-tier cities? Are they fast catching up with the first-tier, or is there still a gap there?
Well, rents are growing by 30% per annum in Shanghai right now. Secondary cities, the one is seeing rental growth, but from much lower levels. So compared to Shanghai and certainly to Hong Kong, rents could be a quarter of what you see here.
When you talk about that, we kind of forget the fact that the government curbs are starting to work their way through the economy. We've just reported an output. It's starting to slow, certainly having an impact on how growth is happening in mainland China, which Beijing is trying to do. In what way is that hindering your expansion plans in mainland China?
Well, the Executive Center work models, which is effectively a hotel for companies, works very well during boom times where companies are speeding to market. But in a slowdown, we act as a hedge. So companies move into the Executive Center, avoiding the capital expenditures of opening their own offices, and stay with us until the market strengthens for them to take their own accommodation. So it works on the up and on the down as well.
So as a hedge, how much more money are you investing?
Well, as I said, we're looking at about 20 million US into just the China sector of our growth. So our objective is by the end of 2008 is to have our network be about 50 centers across the region. 50 centers across the region. Name us some cities. Well, we're Tokyo and Seoul. We're the largest operator in Hong Kong. We are in Taipei 101. We opened there 2 years ago, doing very well. We're doubling our network in Singapore. We're in Jakarta and Sydney as well.
Any listing plans for 2008?
Well, yes, we looked at it earlier this year, decided to bulk up the business, take advantage of the strong market conditions, and go for a listing towards the end of 2008.
Why not earlier? Markets are looking pretty good across the board here in Asia.
Well, I think in part to deliver better value. Larger business attracts more investor interest, and we are so busy growing right now that the management focus is directed at that.
All right. Well, thank you so much for joining us, Paul.
Thank
Executive
you.
Center CEO Paul Salnikow here in Hong Kong.